Bank collapses may no longer be the top headline at the moment, but we are not out of the woods just yet. While the banks and those running them will be bailed out if another bank collapses, you can't count on the same preferential treatment. The best way to protect yourself is to spread your funds over multiple banks, keeping less than $250,000 in each bank. Here are 5 banks with high-yield savings accounts that you can use to diversify your risk and stay below the FDIC threshold. All are member FDIC banks, and all of these banks charge no monthly service fees for their savings accounts. This is not financial advice, nor are they recommendations. Please do your own due diligence before putting your money into any of these banks. In 2008, when I lost my Washington Mutual account, I built a system to prevent ever losing complete access to my money ever again. First, before we start getting into banks, everyone should have some physical cash somewhere safe in case everything gets shut down for whatever reason. Once you've done that, you pick a bank that's quote-unquote too big to fail as your main bank for everyday transactions. This bank should have your discretionary funds and enough for your recurring expenses like rent, car insurance, and groceries. Even if you're well below the FDIC limit in this first bank, your emergency funds and other savings like house or car funds should be in higher yielding interest accounts scattered across different banks. You should only keep one of each of these savings funds in each bank, and of course, stay below the $250K FDIC limit. This allows you to still benefit from those competitive interest rates from smaller banks while making sure you'll be okay if you have to wait a few days for the FDIC to make your funds available should the worst happen in one or more of your banks. This first bank is my main bank that I use for personal day-to-day transactions. It's big enough to be considered too big to fail because it survived 2008. Despite their size and notoriety, they still managed to offer a competitive interest rate of 3.4% APY as of March 23rd. There's no monthly fees or minimum balance. They have many physical branches and ATM locations. This is Capital One Bank. This next bank offers an interest rate of 3.75% APY. While they also fall under the too big to fail category, they don't offer checking accounts, so you can't use it as your main bank. This is Marcus by Goldman Sachs. At a better APY of 4%, this next bank with no minimums and no monthly fees offers to reimburse up to $5 of ATM fees. This is Synchrony Bank. As we climb to better interest rates, this next bank looks just a little better than Synchrony with an APY of 4.25%. With no fees and a minimum of 1 cent to receive interest, this is Citizens Bank. Next on our list is a bank with an interest rate of 4.45% APY and has another savings account option that pays you in air miles instead of cash. They don't offer checking accounts though, so unfortunately this can't be your main bank. This is Basque Bank, a division of Texas Capital Bank. If you liked this video, you might also enjoy this one here on the screen. Subscribe to join the Cash Flow Club and hit the bell so you don't miss a single video.